Good day. Ira Epstein with your SPDR ETF video for this Wednesday, and we're at the 19th of February 2020, just after 4:30 p.m. Central Time. I do that all from memory, and if you try it and you do it as often as I do it, even you get confused, doesn't matter. Well, it's an interesting day because no matter what we hear from different corporations, be it Adidas, Puma, Tyson, and so on, it doesn't matter if their corporate earnings are being hit. Today, the EIA, the Energy Information Agency, came out. They are cutting barrels per day of world demand for oil rather sharply for the first quarter. And that's another sign that the Chinese factories aren't back to work. Nothing's going right. How they're going to get them back, I don't know. I read today that they're putting in, if you will, I'll call them bounty, not negative. In other words, bring a friend to work and you get a raise, or you get a bonus, or you get something. Trying to get people back to the factories in Shanghai and Beijing. So we'll see if they're able to do anything. But right now, an interesting time. At the end of the day, by the way, in the energy sector, the market did come out with a build of about 4 million barrels on the API numbers. Any net build isn't good at this time, and so I'd be watching what that's going to do. So let's go to XLK, the technology sector SPDR. As you can see, a new high for the move. So with all the, if you will, factories not open, Apple saying it's going to be impacted in the first quarter, supply chain issues, this market's still a new high for the whole move. When we take a look at the swing line study on it, that's this brown line, you have a pattern of higher lows and higher highs. In other words, the break lows, each one has been high, ending up higher than a previous one, and you're able to take out the previous rally highs. When I add to that moving averages, the 18-day average of closes, we're over the 100, and the 100's over the 200. That's all been bullish. And if you'll notice, on the breaks, we've basically been holding since last October. Each time we break into this area, I could even go further back, that's the area that the market seems to be fighting at, and certainly the 100-day average with it. So it's a classic bull market that hasn't shown a sign that it's tired at this point. One of the resistance points that I look for are the Bollinger Bands, and the reason is the algorithm adjusts itself so that 95% of the time the market will trade within the band. You don't want it to be 100%, then why put it on the chart? So what you're looking for is a number that's what I'll call, quote unquote, a natural number where pros that are traders are looking to take positions off, and then they're finding another way for themselves trying to enter and trade the market. Not everybody buys and holds. If that's what you're looking for, terrific. And I'm not saying that's been a bad strategy in any manner, but it's buy and hold what sector, and so on. And that's why SPDRs and ETFs came alive, because they help you pick out different sectors for rotations. When we look at slow stochastics, that's a momentum oscillator. And when both numbers of it get over 80 and stay over 80, you change from being overbought. Overbought is when the red line first approaches and gets over 70. Embedded changes when you have several days with both of the numbers that make it up. They're called a K and a D line. Think of them as the red and the blue going sideways over 80. Until the red gets back under 80, that momentum is there on the bull side, and I think that momentum leads price. And therefore, I'm looking for pullbacks to be buying opportunities for the pros. So I still see a bull market there. I don't in the industrial sector. This is a market that got up, and you can see here, got up to that number and rolled right back down. So even though you have a higher lows, higher highs, you have divergence. You have momentum saying it's not agreeing with the upside of the market. Always be careful of that. I think momentum leads price. You could be headed back to that 18-day average, but this sector is not acting like the tech sector. When you look at the energy sector, you've gone up, and now 4 days in a row, or is it 5? 1, 2, 3. I'll call it 4 out of the past 5 days. You're stuck at this 18-day average of closes. The market would lose this thrust to the upside if it were to take out 53.63. If it can go up further, wherever this Bollinger Band comes in tomorrow, and let's see if I can get that to move for us. Yeah, there we are. This band is losing, as you can see, it's dropping by about 50 points a day. Got it? I'm giving you an approximate. So I wouldn't be surprised tomorrow if it's around, 55, 75 or so. So that's an area that I'd be looking at where I think on the first challenge of it, pros look to take money off the table. In the QQQ, the NASDAQ, higher lows, higher highs, all-time highs. Next resistance, 239.70. You have the embedded reading. Until this is lost, I'm going to stay with what I know. That is that I think that pros buy the breaks until that's lost. Looking for new challenges to the upside of the Bollinger Band. Doesn't have to hit it. There's other factors you could put in there, window envelopes, other lines, but it gives you on what I call this chart, the way I do the afternoon videos versus what I do. Well, let me phrase this the right way. You all know that I'm putting out an afternoon spider video different from this. It's for subscribers. Right now I haven't charged anyone for it. It's free to all of you. Just go to our website and sign up for it at www.iraepstein.com. But I'm going to start charging for it. And in it, I put on more indicators than this, and I talk more specific. This is exactly where I think it's going to happen. This is in front of this number. I don't think it's going to hit. That's how you'll get the talking from me. Well, in this case, let's go back to the emerging markets. We know that the problem there has been the coronavirus. As much as everybody liked these at the beginning of the year and thought the dollar, U.S. dollar, was going to be bearish this year, they've been wrong on all this for the first month and a half, not because maybe their calls were off, but because of a virus. And it's changed the game. You got a higher high, a lower low. You're stuck right here at that 18-day average. It's neither bullish nor bearish. GLD, bullish. Now, I still tell you what I think, and what I think is the first time you hit a Bollinger Band, which wasn't here. This was Friday's action. This was yesterday, Tuesday. It seems so long ago. I think pros take some money off against that. You're overbought. You're against it. I know that people are going to tell me it's a breakout, and I'm agreeing with them. I'm in that camp. Don't get me wrong. In that camp. You had sideways action. You've broken out from it. So it's one thing to take some money off the table. On the second day, when you stay over that band, it's telling me more of a story. And until this market gets back under 147.01, I'm going to consider this to be a breakout. An overbought market at the upper Bollinger Band in a breakout, but it can still give you pullbacks. When I come to the miners, same thing. If we let me come back here. It's requiring me to do this. I don't know why. I'll figure that out. But here's the market yesterday, Tuesday. I'm going to tell you that the first time you hit an upper Bollinger Band, that's where I think the pros are going to take some money off the table. That number today was 29.56. You closed 29.75. Okay, terrific. I still think that's what the pros did. I see support back at the 18-day average of closes. Doesn't have to get there, but that's where I see the support. When we come to TLT, overbought, trying to get up to that Bollinger Band. Will it be able to do it? It's going to be the question. If it does, I'm a broken record. That's where I think the pros would take some money off the table. By the way, this was that sideways action that we talked in gold, and when you get over it, this is what I call the breakout, and then the market naturally comes back at some point. Usually. I can't say it always does. Here's that instance where you're looking for it to come back, it doesn't come back. This is the euro currency, the FXE. And look at how this market has fallen. It reminds me of a coffee chart. I said that to you the past 2 days. This is a market that if you're not in it, I'd be very cautious. You can get bounces at any time for no reason. Then, my chart of the day for you, TAN, T-A-N. This is the Invesco Solar ETF. And we're getting a lot of talk about solar energy, the Musk systems again, what's going on, people wanting it, and you don't have to believe in it, but this is pretty much a breakout chart. It's got the embedded reading, it's got the higher highs, higher lows, it got over the Bollinger Band, pulled in, kept the embedded reading, the pros bought it again up to here. So something that I watch. I'll throw one of these in every now and then so that we get a feel for what's going on. I want to remind you, if you're looking to try my SPDR ETF subscriber video for free, go to our website, www.iraepstein.com. It's free. Sign up under free offers. We'll get it to you. We're going to start the subscription base probably happening before the end of the month where we start charging for it. So take a look at it. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.